when we look back at 2022, it's a lot of crazy shit that's happened, Harry. How do you think we will reflect on this in 5, 10 years' time, and how did it make us stronger?
Yeah, I mean, I think to me, it's very clear.
Yeah.
It's that financial contagion, Bitcoin does not fix financial contagion, right? Like if you and let's be very clear about what happened in 2022. What happened in 2022 is that there were a lot of loans that were made either collateralized by nothing or collateralized by bullshit or full-blown fraud and theft, right? So and we can step through all the examples as has been done time and time again. But basically there was a lot of leverage introduced into the system that had no basis for being there, had no sort of laws of physics reason to exist. And what came of that is what comes out of any leverage bubble, which is it pops. A lot of people who thought that they were well collateralized weren't. A lot of people who thought that they had money deposited somewhere realized they didn't. And it's the South Park meme, and it's gone. And so the bubble collapsed faster than anybody was able to salvage liquidity or salvage collateral. And so what we're going to look back on is how these lending practices, this is not a crypto year. This is a financial infrastructure year that we're going to look back on and say, these are lessons, for better or for worse. The banking industry learned these lessons several times and do everything that we as a extended industry got burned for. The traditional banking system does all of these same types of things like pretty well, right? They know how to margin a loan. They know how to handle collateral. They know how to, there's a reason why your brokerage is not also your custodian in a stock market trading venue, for instance, right? So if I have an account at E-Trade doesn't hold the stock certificates. Bank of New York might, or Brown Brothers Harriman might, or another venue might. And so there's a separation between the brokerage and the custodian. I guess we all figured out that that's important this year. And why is that important? So, why does Bitcoin fix this? Because Bitcoin removes the need for the custodian altogether. What everybody else who's participating in other versions of crypto assets has learned is that you can self-custody it or you can partition custody. Both of those are better than commingling custody with brokerage. Because if you commingle those things, that's how everything gets fraudulent and disappears. Because that's what's happened, whether it's Celsius, 3AC, FTX, pick your bad actor. All of those problems happened because people were allowed to borrow money without guardrails or without reasonable collateral.
If the traditional industries learned this in 2008 and many other times, how do we fix this in this industry? Because you can fix it for yourself. You can self-custody. If you've got no counterparty risk, when there's a contagion, you still get your Bitcoin. But there is still financial damage done in the purchasing power's hit.
Absolutely.
And therefore, in 4 years' time, 2 years' time, 3 years' time, there's multiple ways this won't happen again. There might not be the liquidity in the market to finance these type of businesses, or those who are lending might have better lending practices. Mm-hmm. But what else can be done? Because human greed never goes away. People are always trying to find weird, greedy ways to bring leverage into the system. Is this a natural phenomenon?
Yeah, I think it is. I think it's a natural phenomenon to the degree that we as individual actors across the whole ecosystem tolerate it, right? Like if yes, there's a price impact, but if you held your Bitcoin on a hardware device, you woke up with exactly as much Bitcoin as you did the day before, BlockFi halted withdrawals or whatever, right? So there's these sort of counterparty related consequences that you have either passively or actively opted into. And so what you as an individual choose to opt into, which is to do business with a venue that does something that you either don't understand or you're exposed to, or, in the case of, and I think this is why the FTX story has been gotten wrong so many times, is that they had a terms of service that they lied about. They defrauded you. They committed a crime. And so why were they able to commit that crime? Number one is they were bad. Number two is that they held they held collateral for more people than maybe that they'd deserved to give them that collateral. And so it's critically important to understand, if you do not self-custody your asset, who is custodying it and what kind of regulatory framework are they operating within? What does their balance sheet look like? So let's just say I custodied, one share of a company with Fidelity. I'm able to get insight into Fidelity's balance sheet because, they're a regulated entity. Or if I'm looking at a publicly traded company, for instance, like Wells Fargo or JP Morgan, I'm able to look at their balance sheet, which says, these are their liabilities. If they go away, what assets do they have to pay me when I sue them for losing my thing? We didn't do that, right? We're letting Google Sheet screenshots replace public company disclosures. And like, that's the lesson, is like, and this is, maybe this is cold, but like, we need to grow up and do business like adults and deal with each other like adults. Yes, we can do the Bitcoin thing where we self-custody and we take possession of our asset, and that's critical, and we should do that. But we also need to do business with each other along the way. And accepting inadequate corporate governance or accepting inadequate financial reporting or auditing, like, we can't tolerate that. And I think that's what got us into this mess with FTX, with 3AC, and with others, is that we let a piece of paper and a Twitter reputation do the talking instead of an audit, and shame on us.
But how do we enforce that?
By not doing business with them if they don't provide it.
Sure, but we're talking about 5 or 6 bad actors cause this entire contagion, primarily.
Yes.
5 or 6 primary. Other people will do business with them. So what I'm getting at is, do you think this is something that gets solved by the industry and an industry set of standards, self-regulation, or do you think it comes from central kind of regulation? And then the reason I bring it up is, I'm pretty well known for not being opposed to regulation. And what happened after the 2008 financial crisis was new regulation, which put stress tests on banks and their ability to survive. And they've largely worked.
Yeah, I think that it's not about being pro or anti for me. Yeah. It's just about being a realist. And I think what we end up seeing is an all of the above.
Yeah.
Frankly. I think different jurisdictions are going to take different postures and introduce different rules, like it or dislike it. It's about dealing with the reality in front of us and continuing to, number one, work on Bitcoin and make Bitcoin more useful. And then number two, build exciting businesses, with the time and attention that we have, right? We've got an industry full of incredibly smart and dedicated and principled people building exciting businesses, whether it's on Bitcoin base chain or Lightning or something else, continuing to use new products and stay open and excited about what this technology can do. To me, I try to really, really aggressively like check myself and remind myself that, imagine if this was, internet and right now it was 1994, right? What would I say to myself if I was
buy
able
more
to,
internet?
Exactly. Buy more of it, but also use more of it, right? Like nobody had built all of these sort of these internet enabled businesses yet. And so the best was going to come, Facebook wasn't going to be founded for another 10 years. Google didn't exist yet. Amazon had barely just gotten started. These were the most important companies in the world had not been started.
It's crazy, really.
And so like, check your time preference privilege, bro.
I always look back at Instagram selling for $1 billion and think, Jesus. I remember the time when WhatsApp sold for 19 billion. I was like, wow, you guys have done well. But the guys at Instagram sold for $1 billion. I mean, didn't the Google guys have a meeting with Yahoo and they offered them $1 million for their original technology?
I think so. Well, and then Snapchat got offered and turned it down.
Yeah, it's madness.
By Facebook as well. Speak of podcast fatigue.
Yeah.
Do you listen? I have a podcast recommendation for you. Okay. Do you listen to Acquired?
No, I'll check it out.
Bro.
Hold on. Did they just change their name or something? I think there's maybe a company that's become called Acquired. I'm sure I saw something on Twitter.
That's possible. These and it's they're shitcoiners to be fair, but they're also awesome business historians, and they do like 2 to 3 to 4 hour deep dives. I think they do like one episode a month on a different company, and they do a really good history of a bunch of the companies that we just mentioned.
I would definitely go and check that out. Okay, before we close out, a couple of topics. In terms of mining, looking forward, what do you want to look forward to this year? Because it's been a rough time for miners. I think, obviously, I think it cut deeper than a lot expected. We've seen some massive companies in huge amounts of trouble, some refinance. That goes back into that whole fucking contagion, though, like people using ASICs as collateral without that consideration. When the price drops, the ASIC value drops, which is obviously an issue. But what are the reasons to be optimistic about mining?
The more time that I spend kind of looking forward right now on mining, Bitcoin's going to do what it's going to do. I think the machine efficiencies kind of are what they are right now. I don't think we're going to get way more efficient from here. How can we creatively integrate into electric systems? So being able to discover a second revenue stream for miners, which is playing unique roles within energy systems. Riot does a good job of this. A bunch of the mining companies are thinking about this.
We saw that Hive thing today.
Yep,
194 Bitcoin, was it? 184 Bitcoin in value from shutting down.
Exactly. So being able to play these unique roles within energy systems is something that Bitcoin miners are uniquely positioned to do. So continuing to spend time thinking about what role a mining company can play when it relates to grid stability, when it relates to average price, when it relates to all of these different kind of core energy functions. Introducing a mining company to that ecosystem is incredibly positive sum, is what we've seen. And so looking at new creative use cases for that, what Jack and Stillmark invested in Africa around these stranded hydro mines, gridless compute. Thank you. Stuff like that. I think that's all tremendously exciting, and I think that as time goes on, those types of unlocks and secondary revenue streams, in addition to the block reward and subsidy, or the transaction fee and block subsidy, like that's what gets me really fired up. And I think that matters regardless of bear market, bull market, whatever. Like that's important to work on in every market cycle.